Good morning, traders. Happy Monday. Wow. It's been raining here like crazy in Florida, right, Kyle?
That it
I came back
has.
from Chicago. Yeah, pretty crazy. Yeah. Anyway, well, we're going to have a quite the week, I believe. This is a lot going on, and there's a little bit of nervousness in the air, with Monday, the anniversary of October 7th. That's why we had a $2, what was it, almost $2 up in crude. Um, let me just do one thing here. So let's take a look at the S&Ps for starters, right? Yeah, so the crude earlier was about $2 up, and now it's $1 up. So the SPUs are kind of in a hang time mode. I think it's waiting to see, which way the bigger funds or what kind of news might come out. So we're a little bit in a holding pattern. You can definitely feel it because the market traded inside the value area from Europe. Asia got a little happy feet right on the opening, but really held up at good resistance. The overnight highs here, let me get my drawing tools. These overnight highs here basically was the point of control from the breakout fake out, if you remember, we had. And so it stopped right there. That was the level I had, and that was the high. So that's why we had a triple kind of top, and then we sold off. And all we're doing is we're trading inside the value area here. This is the value area from Friday, right? So my pivot is right around here. It comes in at 73, 57.73, kind of the over and under. Now, that was a PLC and kind of the middle of the range from Friday. And you can see the PLC from Europe is really right around the pivot. So you don't want to get too excited. This is going to be a day where everybody's kind of waiting for direction rather than jumping in. And that's my opinion. And it's only an opinion game. So, in the big picture, the SPUs held this level. It was a previous month low kind of thing. And we had a double test and came back into the middle. And if you look at the range from this day here that we had, and I believe that was non-farm, I think it was non-farm, wasn't it? No, maybe it was CPI. Well, last week, this range here pretty much stayed inside of it, which is pretty amazing because that's one we got one, two, three complete 24-hour sessions inside this day. So we're looking to balance maybe until something comes out. I wouldn't get too excited. You don't want to chase the market on a day like today. Um, Definitely want to uh, you know, be open-minded and don't have a bias because anything can happen in this situation, which is overseas. The whole Middle East thing is kind of being watched very closely, right? So the pivot right here at 73, this was a pretty good level. We got close to the high volume node on the overnight session. That really comes in. Now, let me just take a look at, give you the actual figure. The overnight session was 57.6275. And 5760 is the high volume node. It's also kind of the inside pocket. When you look at the tops here, right? When you come out of this kind of move, uh, I call this the inside pocket because you've got all this support. They're like pin cushions. Market comes down and, all these spikes and tops end up being major support when you have that kind of a situation. So let's see. So, basically, That is price overlap, and we came back down to it. All right. We'll come back to this in a minute. You can add, let me take this over here for a second here. If you look at it, sometimes we can look at it like this. You can see how the market had a nice move up. These are PAV reversal buys. We had the sell signal here, came down, and now we're trying to lift. So we're in a more of a positive mode, but I'm still in the camp that we're inside last week's range, and I think we need to do a little wait and see which way we want to go. The big number, if we do take the overnight highs out, we're probably going for the all-time highs right around 58.30. And a side note, right below the lows of the day, this high volume node 57.60 kind of, weaken the market where we can do a full retest of Friday's low. That's just my 2 cents. All right. All right, let's go. We'll come back to the ES real quick later on. This crude, of course, was well watched. We had a nice rally, and this rally was a little bit based on nervousness that, with the Middle East and, which is, responsible for so much oil, right? And Israel possibly attacking the Iran's oil tankers and all that going on caused this rally for the most part. We came out of this sideways price overlap, and then we started to do a single time frame in the upside. You can see this is the US session, 1, 2, 3, 4, and today 5. But the overnight made a big pop. But to put things in perspective, I did a couple charts yesterday. I was on with a some bunch of analysts that we get together with, and so I provide my share of charts. But here's the look on a weekly basis, right? This is a weekly chart. This is yearly overlay volume, right? So let me do this for a second here. This is crude, but to give you a little perspective, when you do a step away, because everybody's looking at crude while it's at 75, 76, but really think about it. This is the bottom line is actually 50% back from the 5-year low and high, and you can see this overall sideways price overlap just in the last 2 years, right? So this middle line is pretty important that I just drew in a couple just to give some direction. So this line here, you can see, was the high of 2018. This was the COVID low. This was the, after 2020 and the COVID low, we did a complete reversal. Now, this is something that I preach all the time anyway, even though, of course, this had a lot of fundamental reasons. This here was just capitulation, spike, major oversell. But if you were to do this, right, and add this above, right, you're at the same pretty much price overlay. I'm sorry, the overreaction, the downside creates an overreaction, the upside. And so after this year, we kind of came back into this zone here, and then did a complete adjustment to the upside. So when you look at this crude, we can get up here. Why not? 94, 95. I'm not saying today. This is a yearly chart. But this group that I work with, they're all people like McMillan, Bruce Frazier, Bollinger, and all that. We share different thoughts. Well, this is one of them, and you can just see this is not over yet. I mean, we're just coming back into the middle of this kind of 2-year range, right? All right. Well, I hope that It's just interesting. It's good always to do a walk back, and these volume overlays are great. So now let's take a look at a daily market profile. You can see what we might do is come in and fill in the cave. Here's the ledge up here. Here's the other ledge. You have single prints in between, which is what I call the cave. And the pivot is right almost on the lows. It came pretty close. It's the high of the value area from this US session, right? And kind of like the close from the previous overnight markets. So that pivot comes in right around 74.80 to 85. So we pretty much came close enough to test it. Now, of course, the trend is up. Forget about the whole Middle East crisis. Just look at a chart. The trend is up right now. And it's a pretty convincing trend. You know, when we look at charts, we don't necessarily have to know the fundamentals, but it's nice to kind of know. But the charts, for me, are very similar to how a doctor looks at an EKG. You can think you feel good, but the doctor looks at the EKG and says, no, you got some major issues, right? So in this case, the chart's very bullish, and we have been single time framing. We had 5 days in a row of higher highs and U.S. session highs. So now this is definitely also affected by the news and everything else. So you can always double check the fundamentals. But for the most part, I was a buyer when we broke out of this price overlap. So, it was telling us that we want to go higher, and this was the flip zone on the upside, and we got above that. So here we are. And we're not too far from the swing high with this crude. So the crude is going to be one of those that I'll be watching this week. I'm sure we'll pull out some good trades. It should be pretty volatile just because the unknown creates volatility. It's not, clear what's going to happen with the Middle East crisis, which affects crude more than anything, right? All right, let's go on to the next chart here. So this gold has been very interesting to me. The gold keeps on trying to catch a rally, but we're really in this price overlap. Let me do this for a second. Now this might blind you a little bit, but if you just color in the major areas, this is where the price overlap is. And we didn't close above here. We didn't close below here. So gold is really just this ugly coil. It's not my favorite market to trade. You have to be very careful. But once it gets going, and it's a good market, but this has been huge price overlap. But let's also take a look. Let me go to, let's see if I have this here. Here. Yeah, so I marked this up for you. This is a yearly chart, right? 1, 2, 3, 4, 5, 6. 6 years of price overlap in a very tight range. And then that's when we took off. And that's kind of when we closed here, right? Hang on, I got the wrong drawing tool here. Okay, so we got above there, little bull flag, came right back to the breakout zone, and we continued higher. And over here, we've got these 4 years of price overlap, and then we took off. But we really took off. I mean, this was a little excessive. So I think gold is kind of looking at possible top. Here's 2Ks, right? Right in the middle here, you've got the price overlap and kind of the point of control a little bit, working right in this area. But to make it, clear, when we broke out of the 4-year coil, I didn't think we were going to stop. but it was an equal swing kind of from here to here. Okay, now I drew enough arrows to blind you. So let me take those out. But we had pretty much equal moves above the middle consolidation, which we consolidated there for a bit, if you remember. Kind of between 2,300 and 2,450, we did about a 7-8 month consolidation, and then we broke out recently and had probably 7 weeks of upside with one just inside week. So big breakout, but I think the measured move is right where we went, and gold is actually, I think at this point, not too far from unchanged. It's up $3. So we might be a little tired, but gold also is something that when uncertainty, with as far as the overseas and what's going on can cause the market to move outside of that and possibly out of fear continue. But I just look at the charts. For right now, it's a little bit on the overbought side. Okay. All right. And then I did something that I thought was really interesting. This is an overlay of the SPOOs, the S&Ps. Hold on. With the gold underneath it. And, they're, you would almost think they're close. We just slowly rallied, and then we took off and had 3 years of price overlap since 2021 to 2023, and then we took off. And so we're also, unless we get some excessive buying above these recent highs, the all-time highs, which we keep failing to get above it, even though we've had some great days and we keep trying. The measured move for me is kind of over for time being, but if we take out the all-time highs, then we could possibly begin a new leg. So we're at a juncture here where we have to watch that as far as the ES, but you could see what's going on in this gold. Quite a bit of price overlap when you can just look at this kind of price overlap that I was showing you before. Well, you can't see it with this, so let's just do this real quick again one more time. So I don't think there's a clear direction in the gold yet. The leadership hasn't been clear in the last 2 weeks. We're kind of hanging out, so we'll keep an eye on that. So for the time being, I'm in the mode of selling rallies and buying dips. You can see the overnight market got tested right on the open, and then in the first hour, which is the initial balance, we tested the overnight lows. So we might have the highs and lows in for the day, but I would watch to see how we take out these highs and lows. If we do it with some volume and vigor, then we can maybe take it to the next level. But we're pretty much inside Friday's range, which is higher than the previous couple 24-hour days, right? And the pivot comes in right at the point of control from Friday and the overnight session, which is as well the high volume node. It's the highest volume node of this structure at the moment. So that comes in, that pivot comes in right around this 2669, my favorite number, and 70. All right, let's take a look here now at the EC. The EC is at a kind of a juncture. This big level down here is somewhat of a pretty big area that we traded and did a lot of price overlap in the past year. And so we're not that far from testing it. This was the open and break. This B formation usually is typical when there's long liquidation, when you open up and break and you have no pullback. So, and we close down here. The pivot happens to come in a little bit above the overnight market. We pretty much tested it. So that comes in at 110.16. 15 to 16. It really is the pivot, so you might as well watch the overnight high, or yeah, the overnight or the U.S. session highs, the overnight high. This is the 24-hour period. So, with that being said, we have this big. Once we get above this pivot, which I think we will, just my 2 cents. We've got all these single prints in this cave here. So we might try to make a push for the previous US session lows. All right. All right. That comes in at 110.38 is this low here. So we might work into this, the single prints, do a little structural repair. Usually we do, when we move into it, like in a situation like this, we do at least 50% in over retracement. And then sometimes we fill the cave all the way. So we'll keep an eye on it. But I think we're a little bit oversold in this for the time being in this EC. And even if you look here, right? Let me bring this over here. Trying to get this adjusted for you. Okay, let's do it like this. So you can see right here, this yellow line is the 200-day moving average, and we're really hugging it, right? So we went back down to it. That comes in at 109.83, 80. So, and here's this inside pocket, price overlap here, price overlap here. So this is a pretty big shelf, kind of a holding pattern for now. Not saying we can't break it, but I think we can fill in that cave like we were looking at right here. All right, let's take a look at the bonds and get ready for the opening. Here's the bonds. Kind of went into a little deeper today because I was showing you those other charts. Bonds look like the EC, right? We had the open and break, and that's they're like cousins. They work together pretty much. The only difference is the bonds are trending lower. And I pointed that out yesterday because if you look at let's see if I have this here. I think I have the bonds here. There we go. No. Okay. All right. So I didn't do the bonds on here, but I definitely looked at it and it looked like it was going lower. Okay. And certainly we are going lower now. We just took out the previous swing low that we had a while ago, but 120 is in the cards for me, this 120 level, even though, everyone wants to think that they're going to go higher because of the interest rates could go a little bit lower. But you know what? It's not driven that way. Right now, you're getting a little bit of a downward pressure in the bonds. And I think 120.26 is, very possible in the either today or soon. But we are in still a bit of a sell-off. And this was a big consolidation up here. So I'm looking for some more downside. Now, if we happen to get a rally, these single prints, similar to the EC, might get a test. So above 112.14 is my pivot, 122.14. And so we'll wait and see. Let's go back to the ES and the NAS. We're right on the point of control pretty much for the most part, close to the pivot. And let's get ready for the opening. Let's not chase the market. Pick your spots today. And there might be chatter in the background to cause some, spastic moves if we get some chatter. All right. Let's rock and roll.